All right, so we're diving into something pretty interesting today. How the new Treasury Secretary pick, Scott Bessent, could impact your investments.
Oh, yeah.
I mean, we've all heard that term fiscal hawk,
Right.
right? And it usually kind of makes the market a little, jittery. But this time, it seems like it's more anticipation than anxiety.
Yeah, yeah.
We've got some excerpts from a financial analysis podcast, and it really kind of breaks down his potential policies. And then, it kind of gets into the ripple effects on U.S. stocks and bonds. So it should be interesting.
Yeah. The interesting thing here is the market seems to be welcoming the idea of someone who might actually get a handle on the national debt,
Right.
And that kind of brings us to the 10-year Treasury yield. It's been, stabilizing around 4.5%.
Yeah. Yeah. Everyone's kind of watching that yield,
Yeah.
Like, what does this mean for, for the market? So
Mm.
can you break down for us why that 4.5% figure is so significant?
Yeah, for sure. For sure. The 10-year Treasury yield it's kind of a benchmark. It's a benchmark for interest rates across the board. And when it stabilizes, especially at a level that's considered attractive, investors see it as like a signal.
Yeah.
They start flocking to treasuries. And this can have a kind of chain reaction.
Right. So it's not just bonds, right?
Yeah.
This impacts stocks too.
Totally. Totally.
I'm guessing this is where that whole like bond yield stock price relationship kind of comes in.
Exactly. When more money flows into bonds, it eases some of the pressure on the stock market. It's, asset allocation, where investors see the best return potential. So it's this shift in sentiment could actually create like a short-term bullish outlook for U.S. stocks.
Okay. So that makes sense. But then there's that whole thing about the yield curve inverting.
Oh, yeah.
And historically, that's been linked to recessions, which kind of sounds a little ominous.
Yeah.
So are we hitting the panic button?
No, not necessarily. Not necessarily. An inverted yield curve, it's more of a signal to be watchful than, a guaranteed prediction. We need to keep an eye on this trend, especially as Bessent steps in and starts implementing his policies.
Right. So vigilance is key.
Yeah.
Okay, so let's talk about Bessent himself. This financial analysis podcast really kind of paints him as a potential game changer when it comes to the national debt.
Yeah, absolutely. I mean, he's got a reputation for being, fiscally conservative,
Right.
which has piqued the market's interest,
Yeah.
He's also, known for some strong stances on things like tariffs and fiscal policy.
Right.
And then there's this whole 3-3-3 strategy he's been talking about. It's pretty ambitious.
Yeah. The 3-3-3 plan sounds more like a workout routine than like an economic strategy.
Yeah, it's catchy.
Yeah. So can you unpack that for us? What exactly does that entail, and what could it mean for, everyday folks, for our listeners?
Yeah, sure. I mean, it's actually pretty straightforward. The 3-3-3 aims for 3% GDP growth, reducing the budget deficit to 3% of GDP, and then increasing domestic oil production by 3 million barrels per day. So, I mean, it's a bold plan.
Yeah.
Could have far-reaching consequences,
Yeah. Those are some big goals.
Definitely.
How does he plan to actually achieve this, and what are the potential ripple effects? Both good and bad.
That's where things get interesting, right? So to reach those targets, he's likely to advocate for some significant policy shifts.
Okay.
So we're talking spending reductions, tax adjustments, and potentially, regulatory changes. I mean, the impact could be felt across the board, from, government programs to taxes to the cost of goods, cost of services. I mean, it's big.
Wow. So this isn't just like, numbers on a spreadsheet.
Right.
This sounds like his vision could have a tangible impact on our daily lives.
Totally. And that's why it's so important to understand, what these policies might mean for your personal finances,
Right.
So let's start by looking at the potential impact on the bond market. His focus on fiscal conservatism, especially if he's successful in reducing the deficit, could have a significant effect on bond yields.
Okay. Yeah. So we've talked about that 10-year Treasury yield, but how would these policies impact bond prices and yields more broadly?
Well, think of it this way. Think of it in terms of supply and demand.
Okay.
So when a government needs to borrow money, they issue bonds, right?
Oh, yeah.
If they're borrowing less because the deficit is shrinking, the supply of bonds decreases.
Right.
And when supply goes down, what happens to prices?
They go up, right.
Exactly.
And if bond prices go up, then yields go down.
Yeah.
So if if he manages to kind of rein in that deficit,
Hmm.
we could actually see a decline in bond yields over time.
You got it. You got it. And that's why understanding his approach to a fiscal policy is so crucial for bond investors, you know.
Right.
It could signal a shift in the bond market landscape.
Yeah, this is all starting to make sense.
Yeah.
But what about this? What about the stock market? I mean, how could his policies impact different sectors and industries?
That's a great question. You know, his focus on fiscal conservatism and his potential moves could create, you know, both winners and losers in the stock market.
Right.
You know, some sectors might benefit from reduced regulation, lower taxes, while others could face challenges if government spending is cut back. So we'll need to take a closer look at specific industries to see how things might play out.
So it's not as simple as saying his policies are good or bad for the market.
Right.
It's more nuanced than that.
Right. It's about understanding those ripple effects.
Yeah.
And then identifying which sectors are likely to thrive and which ones might struggle under his leadership. So, you know, we'll need to delve deeper into his specific policy proposals and then analyze their potential impact on different industries.
Right. This is fascinating.
Yeah.
It's like a giant puzzle trying to figure out how all these pieces fit together. But let's not forget about the listener. What does all this mean for their portfolio?
That's the million-dollar question, right?
Yeah.
So I can't offer specific investment advice.
Right.
But I can provide some food for thought based on what we've discussed so far. So, you know, his policies could make U.S. Treasuries even more attractive.
Yeah.
As a safe haven asset.
Okay.
Particularly if he manages to tame inflation and keep those interest rates under control.
Right. So treasuries could be a good bet.
Yeah.
Especially if the stock market gets a little wobbly.
Exactly. They could act as sort of an anchor in your portfolio, helping to smooth out those inevitable ups and downs, right? Now when it comes to stocks, it's all about being selective. So think about companies that align with his policy priorities.
Like companies that could benefit from deregulation or lower taxes.
Exactly. But remember, diversification is key. No matter what's happening in the political or economic landscape, don't put all your eggs in one basket, you know.
Right.
Spread your investments across different asset classes and industries to manage risk, you know, effectively. And keep in mind that investing it's a long game. So avoid making those impulsive decisions based on, you know, short-term market fluctuation.
Right. Solid advice. Stay calm, stay diversified, and stay informed. Sounds like a plan.
Absolutely. And remember, knowledge is power. So the more you understand about how these economic forces work, the better equipped you'll be to, make smart investment decisions.
For sure. Okay, so we've talked about the potential impact on bonds. We've even touched on stocks a little bit.
Right.
But this financial analysis podcast that we're deep diving into goes even further.
Oh, yeah.
It gets into some pretty fascinating economic theories related to his potential policies.
It does get a little wonky.
Yeah.
But I think it's worth exploring. One of the core ideas that the podcast digs into is the potential economic benefits of him achieving his goal of reducing the budget deficit to 3% of GDP.
Okay, yeah, that sounds promising.
Right.
What kind of benefits are we talking about here?
Well, so the podcast argues that a lower deficit could lead to some pretty significant positive outcomes.
Okay.
You know, we could see lower interest rates, which would be, you know, great news for borrowers, and it could also lead to increased national savings,
Got
which could ultimately boost, you know, long-term economic growth.
Okay, that all sounds pretty positive, but I'm guessing there might be some downsides to consider as well.
Yeah, you're absolutely right.
There's always a trade-off.
There's always a trade-off.
Yeah. So what are some of the potential risks associated with his approach?
Well, the podcast does highlight a couple of potential risks.
Okay.
One of the big concerns is the potential for reduced government spending.
Okay.
You know, if spending is cut too drastically, it could impact essential services like education,
Well,
healthcare.
Right. Yeah. That's a valid concern.
Yeah.
Are there any other potential downsides that they mentioned?
Yeah, they also discuss the crowding out effect.
The crowding out effect.
Yeah.
Okay.
Essentially what this means is that, when the government borrows a lot of money,
Okay.
it can make it harder for businesses to access, loans and investments.
Right.
It's like the government is hogging all the available capital.
So it's like a competition for resources.
Exactly.
Okay.
If the government's borrowing heavily, it could drive up interest rates and make it more expensive for businesses to grow and expand.
Right. Right. And they connect this back to bond yields.
Totally.
That supply and demand dynamic that we were talking about earlier.
Exactly. Yeah. It applies here too. When the government issues a lot of bonds to finance a large deficit, it can increase the supply of bonds in the market.
Okay.
Which can push down prices.
Yeah.
And drive up yields.
Right. Right. So if he's successful in reducing that deficit, we could see that opposite effect, a decrease in bond yields over time as the government borrows less money.
Precisely. It all comes back to that interconnectedness, between government policy, the bond market, and the overall economy.
Yeah, this is giving me a much clearer picture of how these different factors kind of interact with each other. So we've got the 333 plan, the potential for lower bond yields, the risk of crowding out private investment. I mean, it's a lot to digest. What are some key takeaways that our listeners should be considering in light of all this information?
Well, I think one of the most important things for listeners to remember is that investing in a Bessent influenced market might require a slightly different approach.
Okay.
His focus on fiscal conservatism could create new opportunities and challenges that the investors need to be aware of.
Okay, that makes sense. So what are some concrete steps that listeners can take to kind of adjust their portfolio strategy?
So, I can't offer specific financial advice, but I can highlight a few key points to consider. First, as we've discussed, U.S. Treasuries could become even more attractive under his leadership.
Right.
Especially if he manages to control inflation.
Okay.
They could serve as a safe haven asset in a potentially volatile market.
Right. So treasuries could be a good place to park some cash.
Yeah.
If the the stock market gets a bit rocky.
Exactly.
Okay.
Exactly. They can act as a stabilizing force.
Right.
within a diversified portfolio.
Okay.
Now in terms of stocks, it's crucial to be selective and consider which sectors are likely to benefit from his policies.
Right. We touched on this earlier, that sectors like energy and technology that thrive in environments with less regulation and lower taxes could potentially see a boost.
Right.
But what about those sectors that rely heavily on government spending? Would they be at risk?
That's a great point.
Yeah.
It's important to consider both sides of the coin here. While some industries could flourish under his policies, others might face challenges. That's why diversification is so critical.
Right.
Yeah.
Don't
put all your eggs in one basket, so to speak.
Right.
Spread your investments across different sectors and asset classes to mitigate risk.
That's sound advice.
Yeah.
It sounds like staying informed and adapting to the changing landscape will be key for investors in a Bessent-led economy.
Absolutely. It's
Okay.
all about being proactive, understanding the potential implications of his policies, and adjusting your investment strategy accordingly.
Okay, speaking of potential implications, the podcast also delves into his views on deregulation.
Oh yeah.
What insights did they offer on that front?
That's another fascinating aspect of his potential impact, right?
Yeah.
So the podcast argues that his deregulatory stance could be a boon for certain industries,
Okay.
particularly those that have been burdened by what he sees as excessive government oversight.
Okay, so less red tape, more freedom for businesses to operate.
Yeah.
Which sectors kind of come to mind when you think about potential winners in a deregulated environment?
Well, they specifically point to the financial sector as a potential beneficiary. You know, he's been critical of what he sees as overregulation in the wake of the 2008 financial crisis,
Yeah.
and he believes that that easing some of those regulations could unleash growth and innovation in the industry.
Interesting. But I imagine there are also concerns about the potential risks associated with deregulation.
Yeah.
What are some of the counter arguments that are presented in the podcast?
Right. So critics argue that deregulation could lead to a repeat of the risky lending practices
Right.
that contributed to the 2008 crisis.
Yeah.
Right. They worry that loosening regulations could create an environment where financial institutions take on excessive risk,
Right.
potentially destabilizing the entire system.
So it's a delicate balancing act.
Yeah.
Finding that sweet spot between fostering innovation and ensuring stability.
Exactly. And that's one of the central tensions that he will have to navigate if he wants to implement his vision for the economy.
This is all so insightful. I'm really starting to grasp the complexity of his potential impact and the wide-ranging implications for investors.
I'm glad to hear that. Yeah.
Yeah.
It's definitely a a multifaceted issue with no easy answers.
Right.
But I think the key takeaway is that informed investors will need to carefully analyze his policies, weigh the potential risks and rewards, and adjust their strategies accordingly.
Well said. Now let's not forget about one of his signature policy stances, which is tariffs.
Oh, right.
The podcast dives into his rather unconventional approach to using them. Can you shed some light on that?
Absolutely, yeah. His view on tariffs is one of the most intriguing aspects of his economic philosophy.
Yeah.
Right. He sees them not as inherently negative,
Right.
but rather as a strategic tool to be used in negotiations and to achieve specific economic objectives.
So it's definitely a departure from the traditional view that tariffs are harmful to the economy. How does he justify this approach, and what are some potential implications?
Well, he argues that tariffs can be used to level the playing field in international trade.
Okay.
Protect domestic industries, and even encourage other countries to adopt fairer trade practices.
Okay.
So he believes that strategically implemented tariffs can be a powerful lever for economic growth and job creation.
Okay. So it's more about using tariffs as a bargaining chip rather than like a blunt instrument to punish other countries.
Exactly. Yeah. He emphasizes a nuanced and targeted approach, focusing on specific industries or products where he sees a need for intervention. And the podcast highlights his emphasis on gradual implementation and clear communication to minimize disruptions to the market.
Okay. So it's not it's not about slapping tariffs on everything and everyone, but rather more strategic and calibrated approach.
Great.
How does the podcast assess the potential impact of his tariff strategy?
Well, they acknowledge that it's a risky move
Okay.
that could backfire, if not handled carefully. So they point to the potential for retaliation from other countries, which could lead to a trade war and harm the global economy. They also raise concerns about potential price increases for consumers.
Right. If tariffs make imported goods more expensive.
Right. So it's a high stakes game with potential benefits.
Yeah.
And risks that need to be carefully considered.
Exactly. Yeah, and that's why it's crucial for investors to stay informed about his specific tariff proposals.
Okay.
And analyze how they might impact different industries and the overall market.
This has been incredibly insightful. We've covered so much ground, from the 333 plan to deregulation and tariffs.
Yeah.
I feel like I have a much deeper understanding of his economic philosophy and how it might shape the market.
I'm glad to hear that. Yeah, it's been a fascinating exploration of a complex, and evolving
Yeah.
situation.
Right, but as you mentioned earlier, this is just the beginning of the story. It's going to be fascinating to see how his vision translates into action and how the market responds. Totally, yeah. And one thing's for sure, we'll be here to break it all down for you as it
Yeah,
unfolds.
you can count on it. And to our listeners, remember to stay curious, stay informed, and happy investing. We'll be back soon with another deep dive into a topic that's sure to get your intellectual gears turning. Okay, so we've gone through kind of the potential economic and political landscape under a Bessent-led Treasury.
Right, right.
But now let's get to the part I know you're waiting for. What does this all mean for your investment strategy?
Yeah, no, I'm glad you brought that up because, we can't offer specific financial advice, but this financial analysis podcast does highlight some intriguing potential investment themes based on, his likely policy moves.
Okay, so no handing out stock tips or anything like
All
that.
right. Yeah.
But definitely some food for thought for investors trying to navigate a Bessent influence market.
Yeah, absolutely.
So what are some of the key takeaways here?
Well, one of the most compelling arguments the podcast makes is that his policies could create a very favorable environment for long-term investors
Yeah.
in the bond market,
Yeah.
particularly for U.S. Treasuries.
Yeah, we've touched on that throughout this deep dive, but why are they so bullish on treasuries in this scenario?
Well, they believe that his focus on fiscal conservatism, if successful, could lead to lower interest rates
Okay.
and controlled inflation.
Right.
Making U.S. government bonds a very attractive safe haven asset,
Right.
especially if if there's volatility in the stock market.
So treasuries could be a good way to kind of balance out the risk in a portfolio. What about stocks? Any particular sectors or industries that stand out as potential winners here?
Yeah, the podcast digs into a few specific areas. One that jumps out is energy.
Okay, energy. Yeah.
His goal of boosting domestic oil production by 3 million barrels a day, coupled with his likely support for deregulation in the sector, could create some significant opportunities for energy companies.
Yeah, that makes sense. Less regulation, increased production usually translates to higher profits.
Yeah.
But how would he achieve that 3 million barrel increase?
Well, the podcast suggests, a combination of policies, opening up federal lands for drilling, streamlining permitting processes for new pipelines,
Right.
potentially even offering tax breaks to incentivize domestic, energy production.
So kind of a multi-pronged approach to boosting that energy sector. Are there any other sectors that they highlight as potentially benefiting from his policies?
Yeah, technology is another one they mentioned.
Okay, tech. Yeah.
He's expressed support for policies that foster innovation and reduce the tax burden on tech companies.
Well-
This, coupled with his generally business friendly stance, could create a pretty favorable environment for growth in the tech sector.
Interesting. So energy and tech, two sectors to keep an eye on.
Yeah.
But remember, diversification is key.
Absolutely.
What are some general investment strategies that the podcast recommends for navigating this potential shift in market dynamics?
Well, they stress the importance of taking a long-term perspective and not, overreacting to those short-term market fluctuations.
Right.
They also advise, investors to carefully consider their own risk tolerance and investment goals, when making any decisions.
Yeah, solid advice as always. It's so easy to kind of get caught up in the hype and make impulsive decisions.
Yeah, for sure.
Anything else they suggest that investors kind of keep in mind?
Yeah, they remind listeners that his policies will likely take time to implement
Right.
and show their full impact, right?
Right.
So, patience and a well-defined investment strategy are essential for navigating this potentially transformative period in the market.
This has been such an insightful deep dive. We've covered, his background, his potential policies, the economic and political landscape he'll face, and even some potential, investment themes to consider.
Absolutely.
It's been, really, really fascinating.
It's been great.
But as you mentioned earlier, this is just the beginning of the story. It's going to be fascinating to see how how his vision translates into action and how the market responds.
Yeah, no, absolutely. And one thing's for sure, we'll be here to break it all down for you as it unfolds.
Yeah, you can count on that. And to our listeners, remember to stay curious, stay informed, and happy investing. We'll be back soon with another deep dive into a topic that's sure to get your intellectual gears turning.
Looking forward to it.